Hey everyone, it is Julie here with TipRanks, and today we're taking a look at 3 unanimous strong buy stocks. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we're taking a look at 3 companies that have at least a dozen unanimous buy ratings from Wall Street Analysts. Now, we've actually touched on all of these companies at some point over the last few months, and they have seen some growth since then. But in the last couple of weeks or even couple of days for a couple of these companies, we still have analysts weighing in with reiterated buy ratings and some price targets with some optimistic future growth potential. So we're going to look back at these companies, see what it is that they do, and what these analysts are still predicting for the stock's future. Don't forget to follow along over on the TipRanks website or by downloading the TipRanks mobile app using the links in the description down below. Now let's get right into our 3 unanimous strong buy stocks. First on the list today, we're taking a look at Halliburton. They trade under the ticker HAL and are currently priced at $40.73 per share. Over the past 1 year, they've grown over 24%, and looking at the last few months are up nearly 14%. Halliburton is one of the world's largest oilfield services company. Oilfield services play a vital role in the energy production chain, encompassing various technical and engineering functions. These companies provide the expertise needed to operate oil and gas wells, conduct horizontal drilling and fracking operations, maintain fluid pumps and pipelines, and safely decommission plug non-productive wells. That's just a glimpse of their extensive responsibilities. Last year, Halliburton's revenue surpassed $20 billion. They shared their fourth quarter and full year results near the end of January, where they did come out with an earnings beat. Their Q1 will be coming up in a few weeks on April 23rd, where analysts are anticipating earnings per share of 74 cents. This follows their Q4, where they reported 86 cents per share, coming in 6 cents ahead of expectations, and quarterly revenue of $5.7 billion. For the full year, they reported income of $23 billion, which increased 13% year over year. Their president and CEO said that 2023 was a great year for Halliburton. Both of our divisions achieved their highest operating margins in over a decade. One analyst weighing in on the Halliburton stock is a 5-star analyst from Jefferies, who reiterated their buy rating just over a week ago. They said that the projection for the first quarter of 2024 suggests that Halliburton will meet expectations with a solid revenue of $5.7 billion. This financial stability is coupled with management's confidence in maintaining flat North American margins and achieving low double-digit international growth for the year, which underscores the company's robust business model and strategic market execution. Overall, the Halliburton stock has 15 current analyst ratings, coming in as a unanimous strong buy. The average price target comes in at $47.33, which would imply an upside potential of 16% from current prices. Looking at our most recent ratings here down below, on the low end we do have a rating here back in January with an upside of 6%, a high-end price target from Barclays with an upside of over 33%, and a lot of the recent ratings here in the double digits. The second strong buy stock on our list today is Delta Airlines. They trade under the ticker DAL and are currently priced at $46.83. They've seen some ups and downs in the past year, but overall are up 39%, and in the last 3 months have climbed over 19%. Delta Airlines, of course, is one of North America's major airlines. With several main hubs across the United States, Delta is consistently ranked among the top 5 largest U.S. airlines, whether counting by passengers carried, destinations served, daily flights, or fleet size. On the global scene, Delta flies to major destinations all around the world and has international hubs in Amsterdam, London, and Paris, as well as Tokyo and Seoul. Their airliner fleet totals nearly 1,000 mainline planes, with a wide variety in types and models. They had historically preferred to fly Boeing aircraft, but since 2008, they've been adding a significant number of Airbus planes to the fleet. Delta will be sharing their first quarter results here in just a week on April 10th, and this does follow an earnings beat back in January for their fourth quarter and full year. For their first quarter, analysts are anticipating earnings per share of 35 cents, which would be a 10-cent increase over the same quarter last year. In their fourth quarter, they reported earnings of $1.28, beating expectations by 11 cents per share. The company also generated record full-year revenue and over $5 billion of pre-tax income, which is a near doubling over 2022. In 2024, demand for air travel remains strong, and our customer base is in a healthy financial position, with travel being a top priority. We expect to grow full-year earnings to $6 to $7 per share. Just a couple of days ago, one analyst from Morgan Stanley increased their price target on the Delta Airlines stock. The firm also raised their bull case valuation for Delta shares up to $110, saying that the airline's push into premium will allow the company to outperform the rising tide of airlines' demand growth and will be rewarded by investors in much the same way that Abercrombie & Fitch's recent reinvention as a more premium and relevant specialty retailer has been rewarded. Delta's unanimous strong buy rating comes from 13 current analysts, and the average price target comes in at $55.25, which would imply an upside potential of 18% from current prices. Looking down below at our most recent ratings, on the low end, we do have one buy rating back from January with a downside of 8% if we already surpassed that price target. More recent ratings, we have one with an upside of 81% there from Morgan Stanley, and a lot in the 20 to 30% upside. Now, if you've made it to our third stock today, don't forget to hit that thumbs up button and make sure you subscribe to the channel as well. Third on our list, we're taking a look at T-Mobile. They trade under the ticker TMUS, currently priced at about $162 per share. Overall, in the past year, they've climbed up about 12% and are fairly flat in the last few months, gaining about 0.5%. T-Mobile is one of the largest companies in the U.S. telecom industry. Founded back in 1994, they've become one of the nation's leaders in providing 5G wireless services and is the only wireless network provider to offer 5G across the whole of the lower 48, as well as in Alaska, Hawaii, Puerto Rico, and the U.S. Virgin Islands. They're also working to improve their position in the U.S. rural and business wireless markets, each of these offering a sustainable, addressable market. Their Q4 report came out near the end of January, and they did miss expectations when it came to earnings per share. However, the company did set up a strong outlook for 2024. Their Q1 will be coming up soon on April 25th, following their fourth quarter where they reported earnings per share of $1.67, missing the expectations of $1.91. The company did report revenue of $19.25 billion and had industry best standards across a variety of categories here with net account additions and customer additions. Looking forward to 2024, they're expecting their core adjusted EBITDA to grow approximately 9% at the midpoint. A 5-star analyst from Citi just reiterated their buy rating on the T-Mobile stock a couple days ago. They noted there's a combination of several factors that suggest T-Mobile is on a robust growth trajectory, one of those being the company's successful rural growth initiative and the untapped potential in data analytics and general AI, presenting an opportunity for T-Mobile to enhance their operating and financial performance. The overall assessment is that T-Mobile's unique 5G network positioning will help close perception gaps and contribute to subscriber gains in both top 100 and rural markets, reinforcing the company's prospects for growth. The T-Mobile stock comes in as a unanimous strong buy with 17 current analyst ratings. The average price target comes in at $186, which would be an upside potential of about 15%. Looking at our most recent ratings here, on the low end, we do have a buy rating with an upside just shy of 8% here, and some high-end price targets north of 25 and 26%, a lot of them in those middle teens. So that is a quick look at 3 stocks that have unanimous buy ratings from Wall Street. Let me know your thoughts on these companies in the comments down below. I always appreciate hearing from you guys. And don't forget to make sure you've subscribed to the TipRanks channel. Don't forget that Of course, please keep in mind these videos are never a suggestion to buy or sell any specific stock, just sharing what those Wall Street analysts are looking at. So please make sure you always stick to your own investment plan. Thanks so much for watching. I hope you have a great day, and I'll see you back here next time.